Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news of the oil price jumping while equities slide, as surging crude prices stoke inflation fears. Oil tankers are ablaze. Iran said it will keep the Straits of Hormuz closed, and there doesn't seem to be much Trump can do or will do about that. And the Gulf crisis is severely disrupting global air travel too. Meanwhile, the IEA says, quote, the war in the Middle East is creating the largest supply disruption in the history of the global oil market, unquote. In the US, jobless claims were little changed last week at the headline level. The small actual decrease accounted for by seasonal factors. There are now 2.15 million people on these benefits, very similar to a year ago, but a big increase from 2 years ago. US housing starts rose in February, just as they did in the same month a year ago, and to the same levels. US exports and imports eased slightly lower in January. Their overall trade deficit fell to $55 billion in the month, largely because services exports rose. Canadian exports fell, and their trade surplus with the US narrowed in January, while the deficit with other countries widened. They reported a January trade deficit of 3.7 billion Canadian dollars, mostly due to fewer car exports to the US. And India reported CPI inflation of 3.2% for February, up from 2.7% in January, and that takes it back to the levels they had in April 2025. In Australia, inflation expectations ticked up further in the March Melbourne Institute survey, up to 5.2% for the year ahead. While this is only a rise from the 5% rate in February, it is the highest looking ahead level this survey has reported since January 2023, and is a significant rise from the 3.6% rate in March 2025. It only adds fuel to the expectations the RBA will hike next week at its review on March the 17th. Aussie equities fell, benchmark Australian government bond yields rose further, and they were rising even before this news broke. And in the upcoming Australian budget, talk is that they will assume CPI inflation in the high 4% for the year ahead. Global container freight rates rose 8% last week to be now only 10% lower than year-ago levels. Outbound China to the EU was up 19%, to the US West Coast up just 4%. Rates to China fell. Bulk cargo rates fell 14% in the past week as demand dried up. From a year ago, these rates are now 36% higher, although the base was weak in 2025. The US Treasury 10-year yield is now just on 4.26%, up 5 basis points from yesterday. And the price of gold will start today down another $52 from yesterday at $5,119 an ounce. Silver is down 50 cents at $85 an ounce. American oil prices are on the move up, and by the time you hear this, they'll be likely over $100 a barrel. The Straits of Hormuz remain essentially closed, and the situation is even worse now. The internationally coordinated release of strategic oil reserves has had essentially no impact. The Kiwi dollar has slid another 50 basis points against the US dollar from yesterday, now just over 58.6 US cents. But against the Aussie, we're unchanged at 82.7 Australian cents. We're down 60 basis points against the yen. Against the euro, we're down 30 basis points at 50.8 euro cents. That all means our trade-weighted index starts today down 40 basis points at just over 62.2. And the Bitcoin price starts today at $70,437 and down 0.4% from this time yesterday. Volatility over the past 24 hours has been modest and just on plus or minus 1.4%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again on Monday.